Hello everyone, and welcome to the PivotBoss Monthly Market Outlook for the month of May 2020. Great to have you all. Welcome to the room. Thank you for saying hello everyone. I'd love to hear from you all. And while you come in here, let me know where you're from, where you're at anywhere in the world, what you like to trade, what you're following. Let me know if you have any requests that you'd like me to take a look at later on. What we're going to be doing here, number one, I am Frank Ochoa, also known as Pivot Boss. I wrote a book named Secrets of a Pivot Boss many moons ago, published it back in 2010, and it continues to have a very, very active and loyal following from traders all over the world, from those that bought it from the very beginning to those that are just only discovering it over the last week or so. As a matter of fact, in filling orders here recently, I've been notified that we've run out of paper copies here, so getting more of those as some folks are looking to receive their orders right now. So again, it continues to be a favorite because one of the things that I did with that book was I wanted to write a timeless classic, one that had foundational market principles and concepts that did not rely so much on the finickiness of the market. Instead, it relied on foundational concepts like compression leads to expansion, and the usefulness of the pivot range, and higher value relationships, lower value relationships, inside value relationships, various rejections, and in various time frames. So it's still something that continues to be a great piece of work that folks really, really love, which makes me very, very happy. It was all the more worth it because it was quite an experience to write and push that book out, but all the more worth it, and looking forward to perhaps another one down the road. So again, thank you all for coming in. Great to see you all. Hey, good to see you, Tom. Great to see you all again for the monthly market outlook. What I do here in the monthly market outlook is I look at higher time frame picture of the market from the ES, the NQ, all various futures contracts, and look at where we might be headed, not just for the month, but perhaps heading into the quarter end, and maybe even into the year end or into next spring, depending on the idea that we're looking at. One of the things we did last month was we looked at various recovery stocks, and we looked at quite a bit of stocks at the time. I mean, quite a bit. And we'll review some of those stocks that we looked at and how they performed since. And then we're going to look at some new candidates as well, and some candidates that look like they have a really good shot to bounce now, but also some candidates that have a good shot to bounce in the months ahead. So we're going to take a look at various markets right now. Yes, very, very good question. Is there going to be another PB Masters webinar in the near future? Absolutely yes, and you will be hearing about that this week. This week you will be hearing about the new PivotBoss Masters. There's going to be new PivotBoss Masters live sessions, and there's also going to be live sessions for Swing Trade Pro 2.0. And just right now, as a matter of fact, in the mail, I got some brand new sleek black hats with the PivotBoss logo embossed on the front. Looks really, really great. And so anyways, that's just a little side thing there, but it looks really cool. Anyways, but yes, we're going to have live sessions for Masters, and we're live sessions for Swing Trade Pro 2.0. And then we're also going to do something with Premium as well, because any Pivot Boss mask. That's funny because I have folks ask me all the time, hey, I'd love a shirt, or I'd love to buy this or that. So do you have anything? So after a while of many, many, many years of people asking, I finally decided to open up something here a while back. Well, it's been a little while now, but it's a very quick little spot where you can get certain things. Now, I had to get my hat made somewhere different, but it's just pivotboss.com/merchandise, and then it sends you to the shop. And here's the shop with the logo. But the products are very, very cool. But one of the things, again, like you have aprons. You have an artisan apron, you have these aprons that look really cool. But one of the things is the bandanas, which people have been using mostly for pets and other things. They're all out of stock because those materials are being used right now for, for masks for COVID and those things. So all of that is out of stock. There's no getting your hands on those materials right now, at least for this shop, which is very interesting considering, because nothing's ever been out of stock there like that. But again, there's some cool new products here whenever things get back to normal and are in stock. Like there's some cool new backpacks, like this one for example, which is really cool if you like a duffel. I usually travel with duffels. The fanny pack is in now. I know my aunt and uncle, being in law enforcement, always carried these. These never went out of style because you can always hide a concealed piece there. But yeah, these backpacks are pretty cool. So a lot of cool stuff here. And my daughters are requesting items right now, so got to fulfill an order for the family here pretty soon. Anyways, that's a quick side note right there. But so no PivotBoss masks, and the bandanas are out. But there's a lot of other cool stuff there, some of which are out of stock right now. Anyway, so here's a quick look here. I want to talk about the market from a higher time frame perspective, because there's a lot to look at here, and I'm going to start from a weekly chart perspective. And from a weekly chart perspective, again, for those of you that have been following our analysis for a long time, you know that we've talked about this higher time frame view. We've talked about the expanding range that had been developing. That's something I really like to use in my analysis. But at first it kind of looked like this, right? And then, expanded even higher. It got that extra burst here and kind of, became that. But once it failed, we knew that it likely was going to come back and clean out these lows. And it did. Those were the lowest lows we got, and then this thing exploded back up. So we've had a huge move, right? One of the things that I teach in my material is called key range analysis. And it's based off of impulse moves in the market. So for example, this is a key range high right here. That's a key range low, and that's the key range midpoint. So you form a high right here, and you sell off until you form this low, and you don't go any lower, and then you rally back to that midpoint, and you get this kind of range. The most important levels, obviously, this edge, and the midpoint. And if you are trending higher, then if you pull back to this lower edge, it's an awesome buy opportunity. Back to the midpoint, and then back to the top. Here's what happened here recently is we took out those lows, and then we rallied back to the midpoint, and last week we hit the top. And right at the top is where that FOMC key level came in from April 29th, and we've sold off away from that level already ever since. So it's interesting again that a key range that we've developed in Q4 of 2018 has been the one that has been getting all of the attention here. When it broke here, I mentioned it has a shot to go here and here. And then I said if it rejects here between 22 and 23, it has a shot to come back. And all of this was being said during the drop at the beginning. So very interesting here how this has played out. But one more thing to keep in mind is with this impulse sell-off from nearly 3,400 all the way down, we have seen a strong low now develop, and we've bounced right back. So we may have ourselves an ultra giant key range, and from that key range we can basically forecast a 6,600 target down the road. 6,600. 5,600. 5,600 target down the road. Am I counting wrong here? That's why I need to do my key range. Where are we? 2,223. That's 12. Oh, 4,600. Do the math first. 4,600. So you have 2,200 and 3,400 is the key range. We're sitting right here around the middle of that range, which is 2,800-ish. And again, if we explode to the upside, you get this distance down the road to the upside. So that would be 4,600-ish. So at some point I'll put that up there, and that takes us way about right here down the road. But the deal is we could continue to trade in this range for a while, another year, and digest this recent move and start to work higher down the road. But that target right here would be where it's forecasted. Okay, so I just wanted to talk a little backstory here on this one. In terms of the ES right now, one thing that from a bearish standpoint. Okay, great. Great to hear that you got back on. So from a bearish standpoint, one thing I am watching is the behavior where we are right now, basically 29.50, 29.60. It is the top of the key range there. It's basically that, because we have this over here, and then we have this price action here, and then we had the drop and back up, and now we're here. So do we have another trading range here developing? We've already made the pass down and up, and now we're showing another rejection. Are we about to make another pass down? Because again, that could lead to another pass up, and then all of a sudden we have ourselves a large head and shoulder pattern. So this pattern, again, when it develops in the midst of a very bullish period of time, can break to the upside. It can certainly do this, and instead of breaking down, it breaks up and takes off. But instead of forecasting that, keeping an eye on the major pivot here, which is basically 29.50 to 3,000. 29.50 to 3,000. It's basically this key range high, which is 29.47s. So I am definitely watching that from a higher time frame perspective. This market has been trending higher. It has been very, very resilient overall. Again, we have this larger range that is developing now. And so we may see more of this action with an upward bias. If we were to come down here and retest these lows at some point, I think it'd be hard not to see another big rejection again. Again, some stocks may never come back to their lows. Some may have to come back and retest before they get going. So it's going to be a kind of a pick'em game here. But for the most part, the key level to watch is right where we are. Right where we are, which is 29.50 to 3K. We've already put in a pretty solid rejection tail in the weekly time frame here. And if we can't start getting back above 28.80, 28.90 soon, that could lead to a big drop. So last week's midpoint is 28.88. And this morning in the pre-market report, I mentioned that these markets were developing boxes below last week's low, and that could suggest a squeeze ahead. And if they squeeze, they could be headed back to the previous week's midpoint. That'd be about 28.88 for the ES. So there's a move in play, but if it gets to that zone, is it going to be rejected? Do we drop down off that area based off of this rejection, or do we burst through that midpoint and keep on going? Because every week has been higher for the most part, with higher highs at least, higher highs, higher lows. So right now, a couple of big time levels to watch in play right now, and that's from a higher time frame perspective. I would say on a short term perspective, if you're someone that wants to trade, say, the next week, 1 to 5 days out, tomorrow as a day trade, or maybe hold into the end of the week as a swing trade, this may be the best time to buy the dip right now for a push right up. This may be the perfect time. Great question here by Dwayne. At what point do you switch to the ultra big impulse range? And that is a very good question. It may be time to switch already. And then what I would do in that case, if I were to switch it already, because we've already gone 100% here, right? And then we dropped, and it's honored. Then we came down here. Now the edges that are important are this edge and this edge. It's now the new edge. So what I would likely do is do this pretty soon, where I create the new key range, and then the levels that were important over here, maybe just create key levels out of those. So I know 2947 is that key level from here. This key level is about 2300, and I got those in there, but the key range levels are over here. So I may do that fairly soon. Good question on that. So right now, do we get one more push higher? Are we going to get a sell in May and go away? Right? There's always a couple of seasonality tendencies that we trade in here, or that I try to make very clear as we head into those seasonal tendencies. And let's go back. Okay, so here's a 5-year. Okay, so here we are. So obviously this is very off from where the seasonal tendencies would be, because we had this unseasonable black swan. And so what we're looking at is not so much where we've been, but where we're headed. And if we look at kind of the beginning to May here, the beginning of May kind of goes like this. It goes flat, and then you see price to head up. And then what you tend to see is right here in August, you see an August pullback, and from that August pullback you can bounce into the end of the year. Those are a couple seasonal tendencies that we talk about right now. The sell in May and go away can tend to be there. It can tend to be kind of a summer thing also, like come back in November type of thing. But if we get a sell in May and go away type of deal, this thing's not really showing it over the last 5 years. If we look at a 10-year pullback here, here's the 10-year, and again from this point on, there's not a huge showing of sell in May and go away, right? Here's your sell in May, or that's the beginning of May, and you go all the way through August. But August is there though. I usually say the August pullback could be a great buy the dip heading into the end of the year. But here's May. I mean, it basically kind of maybe pulls back a little bit, right? A little bit, but it's not tremendous here. So anyways, the point is, we will see how it plays out from that perspective. But if we did see a sell in May and go away, it would happen at the previous month's high price. That's this blue line. So price would bounce into this zone, and then perhaps you would see a rejection above those highs. That would be right between the 2950 and 3000 level, and then maybe we come shooting back to these lows here, right? That would be one way that this thing may play out. So perhaps we do see that pullback and bounce to new highs here. Tomorrow is going to be very important, and today's midpoint is going to be 2803s. So 2800 tomorrow, any pullback as deep as 2800 could be a buying opportunity for a continuation higher at the end of the day, so as a day trade. And then if you look up by the end of the week, it would be hard not to see this somewhere back up these highs, right? You have a higher value relationship here in the pivot range, a strong close, and now we're pulling back into the pivot range and bouncing. So if it can hold 2800 tomorrow, or over the next couple of few days, we have a shot to bounce a little bit higher into 2880 and 2900. Beyond that, it's anyone's guess here, as we really rejected hard off the FOMC key level and the 200-day. 3K, is going to be tough up there with an LVN. So if we do get to the previous high, I'd be taking profits pretty quick. So right now, that's kind of the deal here from a short-term perspective for the ES. Let's take a look at the NQ here. Yeah, that's a good one. Key range level as well there. GG. So here's the NQ. This one has been very resilient on its bounce back. I guess I accidentally moved my key range, so I'm going to take that off and put the new one anyways. This one has been tremendous the way that it's played out. GG mentions the initial sell-off key range. That would basically be here, like that. And the midpoint would be right there, for this one at least. And so, you know, we did get down here and grabbed some targets. Once it got back above this line right here, it was headed for this target, right? And then once you hit that target, odds increase that you will come up here and grab that target at some point, you know, when you're going based off that key range. Right now, higher value relationship here, you got to pull back into the higher value relationship with a shot to bounce. That could take you to the higher end of the range, and weirder things have happened than to see new highs after all of this calamity, right? So this is a big time potential bounce opportunity over the next week. Again, you know, you want to be able to see this thing hold 8,700. 8,690 is going to be the midpoint of today's session here, so that's going to be the midpoint tomorrow for this one. If it can hold 8,700, it has a shot to continue higher toward 9,200, 91 to 9,200. You know, all you have to do, it's just basically this pullback with a shot to bounce, right? And if there is a sell in May and go away, then perhaps it would be above these highs, and then maybe we come back to, say, last month's midpoint or something like that. Who knows? But right now, this market has been super resilient. I'm not eager to sell it. So I had to just make a little bit of a disclaimer there. Just going based off of the patterns here and the higher value relationships suggest higher highs unless we see some sort of major rejection to change our mind. So let's take a look now at the YM. The YM also seeing a pullback here within the uptrending market. You can see right here, uptrend right there. It's pulled back into the pivot range. This could provide a bounce opportunity to new highs. That's been the case ever since we made these lows in March. Pullback has been bought. Pullback has been bought. Now there's another pullback. We'll see if it gets bought again. Today's midpoint is going to be very important tomorrow. Again, that is this little gold dot, 23,433. A failure to hold that zone would suggest more weakness ahead. So there's a good shot we open with a little bit of weakness after hours or tomorrow morning, pre-market, or after the RTH open. But that pullback could provide a bit of a bounce for a continuation higher 1 to 3, 4 days out. Unless by the end of the day we fail to hold that mid. So that's the idea here from a short-term perspective for the YM. Looking very good. Now if you look at the weekly time frame of the YM, one rejection here that is going to be concerning, and some of you who use my key range analysis may laugh at how old one of my key ranges is here. My main key range is this one here from the 2018 sell-off. But it's been phenomenal, right? It helped us identify the Q4 of 18 sell-off. We got the bounce off that zone. This thing finally hit the 100% target. And right here, right near the tippy top high of that, is the midpoint of that key range. So basically 24,950. That's the midpoint here. Where it sold off hard, dropped as low as 18K and bounced back to that 24.9, and then put in a hard rejection week last week. So after the Fed came out, so for those of you that know my FOMC key levels, it's basically whenever the Fed has their FOMC meeting, they release their meeting minutes and the Fed interest rate decision at 1 o'clock p.m. Central, 2 p.m. Eastern. You tend to see, you know, a reaction right at that time, and then that price at the open of that hourly bar is now the FOMC key level. That is our 429 FOMC key level, price went sold off away from that level. That gives us an initial bias of weakness here for this market. And if price were to bounce even as high as that zone up there, it could be a sell back down. If it were to somehow push through that level and race through it, then a return would be a bounce and it continues. So it's going to use that level as a pivot. And right now the initial reaction is down, and it's happening off that key range mid. So again, watching to see how this plays out further here, but on a weekly chart basis, we're seeing another sign of short-term topping behavior here. But this week, based on how strong it could be after the pullback, could provide a bounce into that close and midpoint for a big challenge here. So the weekly time frame is going to be very interesting to see how that one develops here. Again, this larger key range is going to be the bigger key range to trade. When you talk about volume profile, and a lot of you may study volume profile, very good way to analyze a market. It's this volume profile right here. One of the other deals is being able to kind of study the developing profile and what it's going to look like at the end. And at some point, it goes from looking like this to looking more D-shaped profile like this, which means it's going to have to come in and fill in some of the trading in here. It's going to have to come in and fill in some of the trading down here, which means, again, we could get as 19K again. We could get down here and retrade 19 before we come back up, and maybe somewhere up here down the road. But eventually it's got to fill in all of this, which means we could be trading in here for a while to fill in this profile and get a D-shaped balanced looking profile. But a very good expanding range here for the YM. Gold right now showing quite a bit of strength overall. If you look at the daily time frame here, it has been trending higher at a very steep pace, but lately it has not been able to really find acceptance above 1760. It formed a lower high right here and pulled back, and here's your FOMC key level 171640. It developed on that day. It went offered the next day, and now when it got above it again, it's being offered again with a failed high developing today. Failed new high in the midst of a down move. That would again suggest some weakness. So this one had a great bounce here back up, had a great bounce here back up, a great little effort here, but the lower high is causing some issues here. We're now getting a failed high here. This looks like it may attempt to rotate back toward 1660s. And if it fails to hold 1660, that opens up 1580 down below. This market's been very strong overall, so I think even if it did have a deep pullback, it has a shot to get up toward 18K, or 1800 rather, at some point down the road. But failed high right here is going to be something to keep an eye on tomorrow. If it cannot find any acceptance beyond 1715, then we may be looking at a downward scenario here with GC, which would favor a bullish scenario in the ES, the NQ, and the YM that we discussed. Right here, RTY. RTY showing a pullback as well to the pivot range here. A very good thrusting type of bar today. A great channeling behavior. Again, it's hard not to see these bouncing here, especially if Russell is involved here. Russell is the 2000 small cap index, and it has a good shot to bounce from current levels, call it 1250 zone, all the way back up toward 1375, 1370. And again, if it can get that kind of rotation there, it'll be a retest of the FOMC key level from below. If bears are going to reject it again, it could be very, very bearish moving forward. But right now, short term, again, we got a good 1 to 5 days up that could be back at these highs pretty soon. I'd keep an eye on 1260 because above 1260 opens up open air the 1302 and 1360 plus. Okay, let's take a look at some stocks here. A couple of stocks here, and if you were not a part of last month's session here, I covered 8 or 10 of my favorite stocks that I've either held for a long time or continue to be active in positions, or even swing positions, now getting back into the options much more now. So some of these you know about. Again, Tandem has been fantastic here. Tandem is one that I mentioned before on the drop here, that if it got to between 45 and 50, it could be a candidate to double back to 90 to 100. And that's a position I've maintained for a long while, that if we got to that zone. It did hit 45, it got below 50, and it's now trading 82s. That's a very strong move. Now, it wasn't trading 45 or 51. We had the monthly market outlook for April, but it was when we talked about it in the room here. It was trading above it heading into it. Now back here, it did get to 60, and from 60 rally to 82 plus. That's a really good solid move. That's about a 33% increase just from that zone, since we talked about it in the monthly outlook. But this is one of those ones that doesn't tend to hang out above these levels long. It can tend to backfill toward value very quickly and continue to trade. So for those of you that did take advantage of this and just had it as a short-term gainer, I would say take it off, ring the register on that one, and run. For the most part, I'm holding this one as a core position that I've already taken profits on 75% of the core position. It has to go negative whatever for me to break even on this one. So everything is kind of icing on the cake as it continues to go up, and I want to look to add back to this position. So that one has done quite well. Another one we talked about was Roku. Now Roku again, we talked about this one, the 60 low being very, very strong in this one, and how it had a shot to bounce and double back to 120. When we talked about it, it was sitting at 80, and I mentioned that still has a shot, right, to get back up, and it's still working its way higher. I mean, it's trading 124s. It's had a fantastic month. This was April, and it's mostly been straight up. Now it's pulled back, and it's holding the 200. It's holding the pivot range on a retest. It's taken the previous month's close price bid here. Again, 120 could be very important tomorrow. If it pulls back to 120 to 118.50, that could be an entry zone for a continuation up again, at the very least, just to retest recent highs over the next 1 to 2 weeks. This one does have earnings coming up fairly soon here, so you have to keep in mind that that could create quite a bit of volatility. But short term, this one's done quite well. We've talked about this one as a long-term candidate. I've loved this one from 30 a couple of times, and the fact that it got to 60 was tremendous here. Even if it were to drop back as low as 90, it could still be a fantastic buy-in, because it will double to 180 sometime down the road. So I like this one as a long-term candidate. If it got below 90 again, and if it pulls back to 118.50 to 120, it could be a short-term candidate back toward 135. Another one we talked about last time was SBUX. SBUX being a candidate here to bounce, and not only bounce back a little bit more quickly than some other folks in the restaurant space, but also be at a long-term level as well. That was just phenomenal. The $50 level here is just sick, $50, and then it bounced all the way back to 80. So a 60% gain in that one very quickly. And now it's offering a discount here on a pullback off the 200 period, and it's dropped over the last 5 days into the higher value relationship pivot range month over month, and now it's kind of like this pullback here before it did that move. Now this thing could bounce again and be headed right back toward 82 to 84. So perhaps a new low tomorrow, that could be in play. As long as it holds above 70 here, it has a shot to bounce. It has a really good shot to bounce because of the higher value relationship. Again, we talked about this one last month as being one that held a long-term level. I wish I was in at 50 here. 64 is another level that, again, if it were to drop as deep as 65, 64, it could still be a buy from a long-term basis. But this pullback right now, again, if it can hold 70 on this pullback to begin the month, it has a shot to come back toward 80 by the end of the month. Could be a good move there. Another one we talked about here is PayPal. We talked about PayPal being one of those that could bounce back quicker. You know, again, when you talk about these types of companies here, they handle payments, right? Handle payments, mobile payments, online, all that. I mean, it's just something that continues to tick, if not even more so in a period like this. So when we talked about it last week, we mentioned how strong that rejection was. And when we talked about at the beginning of the month, April, we had this strong rejection here that led to quite the bounce right away. You had a huge gap up that led to a continuation. And look at last month. Last month, this is a huge month. Look at that. From the lows of 90 all the way back up to the pre-COVID highs of 124. This one was right on the money last month. And again, it started with a strong low down here on these lows, and then had a higher low to boot, which is what we kind of focused off of, and this thing exploded higher. What a move out of PayPal there to respond here. And now that we're sitting on highs, I would keep an eye on 120, because if it fails below 120, there may be a bit of a pullback to come here. All right, let's take a look now. Another one we talked about is AAP. AAP is another one here. This one had higher time frame implications here, based off of major support down here. The fact that it got below 80, it just doesn't do that, and then it rejected hard off of 80. Look at the bounce back toward 125 in this one. The daily chart also had developed this rejection here, which was a great continuation up off that zone, higher high reaction there. So that's another one we talked about last month. I'll start getting into some new candidates here. I'm just doing a quick recap here of a few that we discussed. Apple, Facebook, Netflix, you know, those are on the list too, and we know how those are performed. But then there's some new ones. You talked about kind of new economy stocks because of, you know, pre-COVID, we didn't have to do so much online or video. And now people are having to pivot and do that. We talked about Zoom, TeleDoc, Team, Etsy, ServiceNow, Spotify. Etsy was one that we mentioned that, you know, a lot of folks go to the market there online if they're, you know, needing to help pay some bills there. That was the case with 30 million or nearly 30 million out of work. Look at Etsy last month. Exploded to the upside. Doubled from 35 to 70, and that's just a tremendous month right there out of Etsy. That was on our list here last week. Spotify, I know Spotify is on all the time here at our household. That was another one that was on the list. This one had a great failed new low rejection early in the month, and then exploded higher. Earnings came in and pushed price to 164s. So a really great move out of Spotify. I can go on and on some of these as well. ServiceNow, for example, with a great rally. So we've had a lot of these pegged for some really good moves here. Hopefully we can find some new ones. Shake Shack versus Wendy's, that's right. We had Shake Shack as a buy candidate last time as well. I liked it off of 30 as a candidate. From 30, I mentioned it could be a good, easy 60 double. It got to 30.5 and got as high as 57 and change. Now it's pulled back, and here's the pullback with a great thrust here into the pivot range. That could provide a nice bounce higher. We had it as a buy candidate in our trading room on this day with a failed new low, along with a great entry that I took off just before the open, but still a nice continuation, higher nonetheless. And overall, I think Shake Shack is on the list right now, actually. So this kind of starts the new list here. Shake Shack is on the buy list right now as a candidate to go higher. Again, last month was a really good month for this one, going from basically 30 to 57s. And now with this pretty decent pullback as deep as 48.33 to start the month here, I think a midpoint retest tomorrow at 50.92 or 51 even, which would also be right at the top of the pivot range here of 50.95s. That could provide a nice buy opportunity for a continuation toward 58. So there could be a 50, call it 51 to 58 move over the course of the week, and you can position yourself any number of ways. Right now it's a sweet spot, I think, in the options game. If you like to options, for example, this one could be a way to buy a call outright. If you like to be in the money, call outright. I go below the pivot low rejection, which would be the 47 halves. 47 halves would be a little bit more expensive there, but it would be a great way to go if this thing continues to go higher. Pay more point for point there, dollar for dollar. So that would be a great way to go. If you wanted to, say, do a call spread, you know, if this thing pulls back to 51, you can get like the 52 half, 57 half call spread. That'd be a good way to go. Or you could sell a put credit spread, right? So you would sell a put credit spread and look to trade that on the May expiration with 11 days to expiration. So a lot of ways to engage this one for a nice continuation. I would say a pullback could be a great way to go here for this one for a move to 60. So 60 would double this one. Let's see. Let's look at Wendy's. You say Wendy's won? So right now, Wendy's got a pullback from 12 half up to 21. So it won in terms of percentage gain. That was a tremendous move. Great job on calling that one out last time. That was an awesome move right there on this one. This pullback with a failed low and a nice rejection, higher low after a strong low there. That's a really good move, and it already hit the 200-day right there. That's a solid move. Got earnings coming up on this one here, and that is tomorrow. No, that's the 6th before the market opens, so you have one more trading day on that one. But that's a fantastic move for this one already. And yeah, thank you for bringing that up last time as well. Another one here, this is for those of you that like something with a little bit more action. A little bit more action. This one has had tremendous movement here. I would be careful, but if you're someone who's experienced with options, this may be one to trade, or even outright with shares if you wanted to as well. But you can see right here with this explosive move to the upside here, this one started coming up on my scan the first time here on this day, and I watched it as it just exploded in a percentage gain. Then it came up on my scan here with another big percentage gain the day after. Here it came up with on a scan again, and huge 5-day move up. And then over here, another major rejection on the scan, and then it comes in with a midpoint retest and dropped hard. So it's been money after every single one. And that's not to say it's going to be money again, but this one is clearly in play right now. The volatility is clearly higher. At some point the volatility may be cut off, but for right now, you know, this one is seeing explosive volatility, and it's at the counter trend end right now, where it's had a counter trend phase to the overall trend, and it could be looking at another push higher back toward highs. Even if it just got to 12 from these levels of 936, that's a pretty solid percentage gain. Again, I would probably keep an eye on how much volume and open interest there is for the expiration you might be looking at. I did notice that there is 3,900 contracts of open interest for the 7 strike, for the July 7 strike, which is right here. And with 3,900 contracts of open interest, there was only 2 that traded a volume today at that strike, which is odd. But anyways, this one could see a pretty solid bounce over the next 1 to 7 days back toward the recent highs. That could be nice. Oh, is it the earnings already came out on that one? Yep, you're right. So it's trading 949 right now, 950. Yeah, I see it here. Thanks for that update. So already looking pretty solid there on this one. Another one here was TDOC here. TDOC is very similar to the one we're just looking at in terms of uh, overall structure. A very good channeling structure here for this one. Another one that's really good for the current new economy. And we had this one as a long candidate on Thursday. On Friday, it had a great gap and fill. Today, it opened above range and value, pulled back, and bounced out of this range. We were watching this one this morning and mentioning that it could be headed to new highs. So from this current zone, if we're, say, here, or maybe we're on this day, you know, again, any pullback the next day like this could provide a buy for a continuation. So we could still pull back, say as deep as 171. And we could be a buy for a push higher toward 180 to 185. So for this one, as we mentioned in the trading room a little bit earlier, and for those of you not present and instead are joining us here for the monthly outlook, this one could be approached from many different ways as well. From buying a call spread, say the 175, 180, and see we're trading 174 right now, 174.30, but what if we pull back tomorrow? What if we pull back to 171, 172? Then we're buying the 175 call spread, 175, 180, $3 out of the money, and it'll be cheaper. And then when it does eventually push higher through, or to 180 and through it, then you can then begin to profit off of that and take some off the table as it goes higher. Another way to go, again, would be to buy an in-the-money call, you know, going something below the rejection point, 165s, that can get expensive. And then, again, selling a put credit spread would be another way to go with 11 days left to go. So if you wanted to be adventurous, you could sell the 175, 170 credit spread on this one with 11 days to go in May, and that would be a good way to go. We talked about that one a little bit earlier, and at the time it was sitting at $3 for the 175, 170 spread, $3 for the credit. And right now the credit is 205, so that one's already made quite a bit of money from where it was earlier when we discussed the potential entry. So good one on that one. And again, expecting this one to see another cycle high move where maybe it doesn't get to 200, maybe it falls shy, but it still gets to maybe 190, 195, right? And if it does get through it, then you've got 205 where you might be topping out at up there. So that could be a really good one right there. That's TDOC, one we talked about a bit last time as well. Here's another one that is kind of like PSTI, where it's a little bit of a you know, you got to be careful with this one. It's one that you have to mind your risk a bit. It's one that could easily fail right away. It's gotten beat up quite a bit. This is Bluebird Bio. And for this one, you'll notice the last time it was down here, it had formed this kind of range. You would call it kind of a rounded bottom or a cup and handle, and then it explodes to the upside and gets to the prior pivot high. That's a perfect move. And then it rejects up here, lower high, and then it works its way till it comes all the way back down. And it took out every bit of that. I mean, here's the low, and it all the way down to it, almost took it out. So maybe we need to get that low. Maybe it needs to come down here and get that low. Right? We got this right here. It's kind of like this. And does it drop? You know, does this drop and get that low into 30? Maybe we got to get that low. Maybe we don't, though. And here's the bull case, because what you're seeing right now is a narrow pivot range for the month, and the previous pivot range is here to here, so this is actually an inside value pivot range. An inside value, just like in my book Secrets of a Pivot Boss. It's one of the advanced money zone concepts. Inside value pivot range. An inside value is when you have the pivot range for the current month is inside the pivot range from the previous month, and ideally the current range pivot month is the current month's pivot range is very narrow to boot. When it's very narrow, it suggests expansion could be ahead or increased volatility. And right now we've seen today become a bullish outside day up, and it has taken the pivot range bid and it has taken the previous month's close bid. The previous month's close is this blue line. So, is this thing about to see a directional change of bias? Are we about to go from a downtrend to now bucking the trend and sparking a move higher? These are micro cues here, and we still need to see expansion out of this inside value relationship. But it's going to be interesting tomorrow. Again, watch this tomorrow. If it pulls back to 52, 52.5, right, somewhere in this zone, it could be a great continuation higher over the next 1 to 2 weeks, and perhaps into earnings. If there's a failure to hold 52.5, then this thing fails. So pretty quick. But this one is not. There's never a sure thing in the markets, right? But there's always higher quality patterns than others. This one is a very, very good potential breakout pattern, but that breakout can go in either way when you have it coiled up like this. The signs are suggesting maybe it goes higher. This is going to be certainly one to watch because the volatility in the breakout could be pretty nice. Okay, let's take a look at another one here. We have PBF. Now, PBF was a great one to trade for a while. Energy's gotten hit hard, obviously. This one tends to develop very, very solid patterns. But obviously, energy is just too beat up right now. I mean, crude oil went to negative 40 at one point, right? The May crude oil is just unheard of. And just surreal to see that happen when it happens. And just really goes to show you that anything truly can and will happen in the market at any one time. So you have to always continue to mind your risk. This one has been a phenomenal trader from time to time. It has a really good smooth moving behavior about it, which I really like. I'm wondering if this is done. I'm wondering if it has dropped enough to where the bias has shifted up and we are about to make a move back toward 20, perhaps as high as 22. That would be about a double from where we are. It would be a double from where we currently are. It does have earnings coming up. Earnings aren't going to be pretty probably, right? But is this one beat up already enough? Is it about to make a comeback? The rounded bottom behavior looks good. The compression down here looks good. Look at the kurtosis here. This kurtosis on the volume profile with the steep pivot high, that tall valley, and then super steep slope sides there. That tells you there was major accumulation there, and now it's broken higher. And then on the pullback, it's holding. And does that mean it's about to make its move through the LVN zone here and take you all the way back up that zone toward 19, 18, 19, and maybe back to value? Does it go back to value? Should it go back to value? Who knows? But right now, if it can hold $9, it has a shot to bounce back toward 15, maybe as high as 18 to 19 bucks, 20 bucks. So this one is one to watch out for. Now we talked about value relationships. This would be a lower value relationship where this one is completely lower than this one. Look at this month. This month you had it here and it's up here. So it's overlapping lower value. Overlapping lower value, but the close was above it. And because the close was above this month's pivot range, that's a change of bias. That tells you that the first drop into the pivot range could be bought, which could then lead to an up month. So this is the same exact pattern that we're discussing in the previous candidate, blue. So you're seeing this pattern a lot right now in the market, and if they can hold it, it could be a sign of a broader turnaround for some of these ahead. And again, I hesitate to get you in anything oil related or airlines related or cruise related or anything that's just getting stomped right now, because there's plenty of that. So if you do take a shot on some of these because things are turning out what looks to be right, you have to leverage yourself in a way that you're risking only a certain amount and not over leveraging yourself. So just keep that in mind. Another one here is Sage. Oh, thank you for that. Yeah, the August. Yeah, that's a good amount right there. 3,100 contracts there. 109 days out. Yeah, that could be pretty fantastic. Good stuff there. Here's Sage Therapeutics. This one's gotten stomped as well. And it didn't take COVID to do it. It was already dropping from 190 plus to the current low of 25. But are we done going down now for this one? If you look at the last couple of candidates, there's two things: inside value candidate and then change of bias candidate as well. Trending down, and then it forms inside value, and look at the close price. The close is above the next month's pivot range. That would be a change of bias. You see a bit of accumulation down here. You see value shift down to 29.15. Value is at 29.15 now. And then it took it bid and is now pulling back. Is this thing about to explode? Are we about to see a move back toward recent highs of 55? I think that could easily be a move that could be in play here. Again, this thing tends to move in chunks. When you look at, if you're newer to the room, by the way, and new to our tools, welcome, by the way. I believe we have the best tools out there in terms of the indicators that we use. The indicators we use to help identify key levels, to help identify targets, to help identify value in over and undervalued scenarios, quantifying ranges and the like. A lot of great tools here. And one of them is this one. It's so simple. It's that green dot and then these two lines. This green dot is just the low of the month. Right? The low of the month is just the low of the month. And then from that dot, it forecasts higher our high probability target zone. It's like a bullseye. That's our high probability target zone right there. And we're looking for price to explode to that zone sometime over the course of the month. This is your 100% average target, so that means its average range over the last 10 months projected higher from here. This is 75% of average, so this would be your high probability target. That's your primary. This would be your secondary. This would be your high probability target zone. And you're looking to bounce it right into that area right there. Now, maybe that's too much range. Maybe the volatility's been too much recently. So, like, wow, that's way too much volatility. And you only want to use more recent data. You can come in here and user customize it and say, I only want to use the last, 3 months of data. And instead of 55.86 and 63.70, so call it 56.80 and 63.70, we're now going to get something a little bit more focused off the last 3 months of data, which is going to be right here. So now it's 49 to 53. So that's a user tip right there for those of you that use my tools. We're using it from this low here, and we're projecting higher. And at first it was going, 56 to 73 or something. It was way out here. I used it only based on the last 3 months. It gave us better measurements for the last 3 months, and now we have a better target zone. Perhaps we can bounce up toward 49 to 53. That's a much better target zone based off of the average. Now, I don't usually have to adjust that, but that's something I do in special circumstances when you need it. Okay, let's take a look at, that's Sage, by the way. Again, forming similar patterns here, like it could bounce. Another one here that I wanted to talk about is U.S. Steel. So here's U.S. Steel. This one's bounced a little bit from the lows, so let's look at the weekly chart real quickly here just to kind of get a bird's eye view of what's happening in the chart. It's been basically going down for a very long time. You can see from 47.5 rejected down, right? And then, you know, it used to have this area of support here, but then it went down through 17.5. Then it had this little area of support there, and we even got below that. So now we're starting to head back up off of this zone. Are we about to make a little bit of a recovery back up towards 17.5 over the course of the next year? Are we about to head back to 20? Again, this would be a year out. So right now from these lows, the point is it's starting to look like it's making the upswing now after taking out those lows. If you look here, this low is 6.15, so call it $6, right? That's it. I mean, that's pretty much done. And we could be looking at more upside ahead toward the upper end of the range, but really if it got to value, that would be huge enough. So right now, this is what I like about US Steel rather, is that this midpoint is being violated by yesterday's range. There it is, if I can zoom in. That's the rejection bar Friday. That's the midpoint. Today's range went well through it. It's happening at a spot where there's a change of bias on the moving averages. You can see again the staircase is being taken on the way down with the pivot range, and then the staircase is now going up again. And so when you pull back, you step on the staircase and you go higher. And then you create higher value next month in order to step on and continue higher. So right now, the way that this is pushing higher, the fact that it closed through this midpoint right there suggests to me that we could continue higher throughout the week. We could be somewhere in the 950 zone and as high as 10.25, which is basically this target zone here. So we could be looking at more upside for X ahead, and that's just short term. But remember, do we bounce all the way back toward $20 on the higher time frame or even higher? We could be on a long-term swing up for this one if it stays above $6 for any period of time. Oh, thank you for that Sage info. Okay. MYL is another one here. Got a few more here, and then I'll take a look at a few others here. So this is MYL, and this one is developing what could be a compression that leads to a breakout to the upside. Again, this is another one that's been getting its butt kicked to the downside. But what you're seeing right now is the 18s stand out down to about 17, right? That zone stands out as being support here and now being used as resistance as it's formed a little box below it. So 17 in this case is very, very significant, because if we get above that zone, you tend to go to the top end of the range. So the way that key range analysis works is you have this zone right here. That's the bottom of the range. The top of the range is here. And now you're building out this range completely below, right? This range is completely below this level. And now at some point when it does break back above that level, that 17, it tends to go all the way back to the top of the range. And then it can drop all the way back to that 17 and then do it again. So there could be two trades coming up for this one. If it can get above 17, it opens up a move to 22 to 23. Take the money and run, because it might be headed right back to 17 at that point. So right now, again, two Qs. You got your higher value relationship, higher value here, and then price pulls back and sees a thrusting bar up. That's pretty strong. Now, if this thing can start to break through 17 quarter, it starts to open up the upside, and we could be looking at a push higher. How fast can it make that move? You know, we're looking at perhaps a 2-month move there, because again, what we're looking at is from this low, on average, if you take the average range over the last 10 months, on average, it would get here over the course of a month. And then you need that to project higher over the course of month 2. So this is a 2-month idea to get out here. So if you're looking at options, you know, you may be going 70 plus days right now, something like that. Right now it's 46 days for June, so July is going to be 74. This is a 2-month move if you can get that way. If you want to go August, that might be even better, because you give yourself some room on the other side with days to expiration. So this is a good one again, that if it can get above that zone, it really has some really good upside potential. Weight Watchers is one here that can tend to explode big time. You know, it tends to drop from grace fantastically, but it also explodes to grace fantastically. Right, here's a move here where we had it as a rounded bottom, and we had it as a $12 candidate to double, and it went to 100 plus. We had it here over here as well as a candidate to double, and it did so from there, 25 to 50, or what is it, 20 to 50, almost 50 here. And now we're doing it again. Now we're doing it again. We don't have the rounded bottoms that we had before. We have more of a V bottom. And we have a very strong V bottom here. We have some very strong lows. We have very strong channeling behavior here. And so again, like the ES, like the NQ, like SHAK, and some of these stocks that have pulled back after the recent move up, they are now inside the pivot range, and that could provide a good buy the dip opportunity. So this one, WW, looks good for a move. You know, from where we are, call it 22, 23, into somewhere between 30 and 33 over the course of the next 1 to 2 weeks. It could be a great pushback. It could be a magnet back to the 200-day average, which is $30. Last time it tested that is when it took it offered at 34, 36, somewhere in that zone, dropped to 10, and now it's back. So again, this one could be a great bounce by the dip opportunity, but it could also be kind of a wider play as well. But this one, again, doesn't get below 18 very often before it explodes back to 40, 50, or higher. So last time when we had this as a rounded bottom, you had your breakout day right here, $25, and there's 48. You know, big time move that happened. The time before that, it went from, you know, $10 all the way to 100. Not saying it'll do that this time, but this stock has the capacity to really open up. So if you get in somewhere low, and $18 is low, you know, you have a shot to really go higher. So this one, not just from a short-term perspective over the next 1 to 2 weeks, has a good shot, but it also has a shot, say, 6 to 12 months out as well. And let's take a look here at, I know I'm keeping you as well, so thank you very much for being patient and joining me here today. NRG here would be the last one that I'm going to be taking a look at from my end. NRG has a buy the dip opportunity that is very nice. It's also market structure related. So 30 to 36 is a very good market structure zone. Here's $30 right there, right here, and then there's 36 right there. So if you come back, you can see kind of how this market trades between that zone. Then it trades above it. Then it comes back. Here it is. So it's bounced up through that zone, didn't quite get 36s, and it's pulled back to the pivot range. A little bit of rejections the last couple of days. This could be a completion of that move into 36s over the next, again, 1 to 2 weeks. We do have earnings coming up here pretty soon for this one on the 7th before the market opens. On this pullback, again, it's holding the pivot range, higher value relationship. That could be a bounce right into 36.30 to 37.70 by the end of the month, and that could be a pretty decent little play there. So this is another one here. Now I would say if it fails here and drops as deep as 30, because 30 is a market structure level, 30 could be a buy to 36. So if this one fails here and we see a bit lower, keep an eye on 30. 30 may be the actual better buy in this scenario to get it to 36. So that'll be something to keep in mind right there. And DKNG is coming out with earnings the 15th. Oh, and this one's brand new, isn't it? Or is my chart off? So DraftKings is brand new here with the IPO. One thing I look at with this one, if you're taking a look at it, is the IPO key range. I love to put IPO key ranges on. It gives you the initial range to watch. In this case, we don't even have to do it because the PivotBoss pivots are doing it for us. But the IPO key range is basically the first day or two. It gives you the highest high and the lowest low really quickly. For example, that low, right, which is this blue bar. And then it rallied all the way to this high, that blue bar, and then it dropped back to the midpoint of that range, which is this bar, and that gives us our new key range. And so now these are very important. If you really like DraftKings and you think this is going to be great, then this is the zone you want to watch right here. Does it get back to that pivot low right there? Because if so, if it gets somewhere in this zone, you could trap here and bounce it back to that key range high. And then you can look for expansion through that key range high to a key range target. Remember, with the key range width, we're using that width to extrapolate higher. We're looking for this thing to go to that level right there, which is basically 28.30, 28.40. That's the target right there. That's the target. So you have this range. If you can grab it down here, say it comes down here and you reject and you find rejection and you can get, say, 16, 17, 18, say 1750. 750 doubles you to 35s if you can get there down the road, but you can get it likely back toward this 20-something down the road as well. So anyways, that's the key range that I'd be using right there, and we will see how this thing begins to play off that key range. It's going to be very, very nice to have that to watch here over the course of the next month. Awesome. All right, everyone. Well, I will call it a monthly market outlook for the day there. Again, I want to say thank you all very much for joining me. Again, a lot of great candidates that we went over here today. Just to recap, we looked at PSTI, SHAK, TDOC, Blue, PBF, Sage, X, MYL, WW, NRG, and we also took a look at some of the ones that we talked about before, like SBUX, PayPal, Roku, Tandem, and the like. A lot of good candidates there. Etsy was a great one. Spotify. We'll see what comes out of the group this time around. Everyone have a fantastic rest of your evening, and I will post the recording as soon as possible. All right, everyone. See you soon in the trading room. Take care and have a great night.